Welcome to our third and final daily roundup from the Energy Intelligence Forum. I'm Ronan Kavanagh, Deputy Editor of EI New Energy, and I'm delighted to be joined by three of our moderators from today's sessions to share some insights they've gleaned. From North London, Editorial Director Peter Kemp, from Strasbourg, Senior Reporter and Analyst Philippe Roos, and from New York, Abby Ranjaran, on our research and advisory side. Sorry, Abby, I messed up there. I'll come to you first, Abby. You had back-to-back panels today. Well, not quite back-to-back, but you had a very interesting panel on oil demand and the prospects for it coming out of the pandemic. Can you share your takeaways on that?
Sure, thanks, Ronan. Yeah, absolutely. I mean, I think there were, probably three key takeaways from that, which was first, all the panelists, had a very hard time, calling for a peak in the rearview mirror, certainly, or anytime this decade. So everyone sort of thought that, it's really hard to get oil demand to kind of peak before about 2030. And this is something that was, kind of a consistent theme that we heard across the panel, across the forum, from the trading panel, from different companies, where they all sort of saw demand at least kind of holding up through the 2020s, right? And the 2030s are a slightly different story, but that was sort of one interesting takeaway. The second one is, is even with that, that there is still this sort of this perception that this demand peak is coming, right? That it's coming at some point in the foreseeable future. And that is certainly sort of impacting how financing, capital markets, availability of capital and corporate strategies are being deployed. And that's certainly something that we've heard repeatedly over the last couple of days. And the third point is around, the supply side. I mean, the supply side is really going to need to sort of keep up with this kind of shifting pattern that's demand. I mean, demand is off quite a bit this year. We'll slowly come back over the next couple of years, we heard from the panel. But the supply side is really going to need to kind of stay restrained and not be really in growth mode the next couple of years. And there is this kind of open question about whether there's going to be enough supply to meet demand when it does recover in the mid-2020s. So that was another interesting takeaway as well.
So how is the energy transition affecting this outlook? I mean, is it bringing forward, is there a prospect of peak demand coming forward, or is that not something we need to worry about for the time being?
Sure, yeah, I mean, I think the questions around policy and the greenification of stimulus packages and economic recovery plans, I mean, this is certainly one of those key variables that will affect the path forward for demand, right? And I think this is that everybody's sort of sharpening their knives on and painting a whole host of different scenarios on. And so the question on transition, certainly will matter. The question is, of what magnitude and what time frame, right? I think one of the key discussions that we had in our panel was that it's really hard to see, any sizable impact in the 2020s. But in the 2030s, you could certainly see demand taking a different trajectory as this transition accelerates kind of later on in the 2020s. So that's certainly something that we will be continuing to talk about the next couple of years.
This is going to be a big challenge for oil companies moving forward. Now, Peter, you had a leadership dialogue with Claudio Descalzi, and CEO of Eni. I mean, he's quite well positioned for the energy transition, doesn't he? Can you explain?
Well, I think the big takeaway from my conversation with Claudio Descalzi is that he is incredibly sanguine. We're all in a gloomy mood about being locked down at home, about the world as we know it having sort of gone into a deep freeze with huge potential impact on, obviously, the energy sector. And in recent weeks, we've been inundated by a whole slew of long-term forecasts from the energy companies themselves, from the IEA, from OPEC just this week, OPEC being the exception, but most of the others painting a fairly gloomy picture for oil demand going forward. And during the conference, we heard from bankers, we heard from environmentalists, people suggesting that, hey, good old days for oil are over. To listen to Descalzi, on the contrary, Eni is coming off a very successful bond launch last week. They've raised billions with a very, very low coupon. Success. He's very sanguine about the demand for the huge amount of gas they have in their portfolio. He's not in the least bit worried that there won't be room in the market for it. On the tech side and the transition to a greener economy, he pointed to the fact that Eni has been hard at work in the lab for several years, working on biofuels, working on smarter computer-based ways of doing things more efficiently, cheaper and faster. And overall, I think he made a very persuasive case that this is a very big bump in the road, but the road is onwards and upwards, and things will crest in the years to come, but it's not going to affect the big oil companies as much as many people watching the sector are assuming. And just finally on valuation of the company, for example, he made it very clear that the value of all the major oil companies is linked umbilically to the oil price. And once we get out of this oil price trough, and that's a basic assumption that we will, he expects valuations to rebound strongly too, to reflect a far from pessimistic outlook for the sector.
Interesting. And Philippe, I mean, you were in conversation with Paddy Padmanabhan, President and CEO of Aquapower. They're a big player in solar renewables. They've achieved some remarkably low prices in bids. The oil companies are coming into their field to compete with them. Is he worried about this?
No, he's not. Basically, because the prospects, the needs for new power capacity in general, and especially for new renewable capacity, actually, most of the new power capacity that is going to be built in the next few decades will be renewable, will be wind and solar. The need is so gigantic that he insisted that there will be room for everyone. I mean, if you look at those scenarios that have been published recently by the IEA and others, we're talking about hundreds of gigawatts of new wind and solar capacity per year for the next 30 years. So Mr. Padmanabhan said that there's plenty of room for everyone. We need everyone because the world needs huge amounts of renewable power to replace fossil fuel electricity and to provide electricity to all the sectors and applications which are going to electrify. When it comes to returns and profitability, which has been and still is a big question for oil companies, he insisted on the fact that a known fact, but it's worth insisting that renewable energy is not upstream oil and gas, so it's a low risk, low profit activity, and there's no reason whatsoever that it would change. I mean, in my opinion, and in many experts' opinion, the trend is even that it's going to be more mature, it's going to be lower risk, and it's going to be lower profitability. So there are a number of tricks to enhance profitability. You can do some financial engineering around renewables, but it basically insisted on the fact that oil companies or any new entrants entering the field shouldn't be too greedy and should be ready to deal with an industry, as he said, which is earning cent by cent, kilowatt by kilowatt, its revenue and its profit, and over long periods of time. So there's no real upside in the field. There's no real downside, which is the good thing, but there's no real upside. So you shouldn't you shouldn't expect big, huge profits, and you shouldn't count. That's also my personal experience as a banker. You really shouldn't count on merchant power. And he said it wouldn't be a good idea to rely too much on that.
Thank you, Peter. And I mean, Descalzi kind of acknowledged these different kind of rates of return. But I mean, the oil industry also, as Philippe was saying, they see a lot of room for competition. The oil industry still seems a lot of room for gas, doesn't it? And LNG as well.
Indeed. I mean, he was sanguine again on the potential returns from a bigger playing a bigger part in the renewable energy sector. And he said in biofuels and some of the things they're doing already in wind and solar, they were seeing respectable returns on investment in double digits. So how sustainable that is remains to be seen. But he was quite adamant that despite the doubts that are emerging about the long-term demand for gas and anxieties about the methane emissions, after all, that people are now very much focusing on when they focus on emissions, and the leakage from the gas end-to-end chain is something that people are going to have to jump on very heavily. He was less concerned about that and just was adamant that he wasn't being adamant, he was merely saying that, for example, as we retire coal-fired power stations, he expected gas to move into that breach. And he saw, despite, for example, the huge expansion that is planned in Qatar, that there would still be room for massive resources like the ones that Eni is sitting on with Total and Exxon and several other players in Mozambique. And he even suggested that Mozambique could one day expand to 100 million tons a year of LNG, which is something that has been envisaged over several phases over the decades to come. So he appeared to have no doubts about that at all, and underlined the fact that Eni is very well placed for gas. I mean, within a few years, something like 85% of their oil and gas output will be gas, and liquid oil a mere 15%. So they've made a huge bet on gas, and for the time being has no doubt about the existence of a market for it.
Mm-hmm. But will there be room for the less conventional resources? I mean, Abby, you moderated a panel on US shale. I mean, what's the outlook looking like there? I mean, are they constrained by the methane issue, by this kind of feeling that maybe, you know, things need to be improved there in that kind of end of the business?
Yeah, I mean, I think it was an interesting panel because I would say the overall tone of the shale-centric panel was optimistic, but also realistic, right? Realistic in that there are demand overhangs that need to be worked through. There is still ample supply out there. You know, we have massive OPEC cuts and other sources of non-OPEC supply growth. Whether it's Brazil or Guyana or Norway or what have you, you know, that is still competition for U.S. supply growth. But also, I mean, I think realistic in the fact that, you know, that the industry, you know, despite the, you know, the Trump administration, you know, kind of, you know, pounding the table on deregulation, that it is actually getting more and more regulated, even though not at the federal level, but at the state level from, you know, from the investors, and from other stakeholders. So these are all constraints that the industry is having to deal with. That regardless of whether you have four more or you have a President Biden in the seat in a couple of weeks, that the industry is still going to have to grind through some of these issues looking ahead. So I think that the tone of the panel was optimistic on a recovery, but realistic that path is going to be a different path than what we thought, you know, kind of pre-COVID, right? And that's kind of been our view as well, which is that there will be another growth phase, but that it'll be more muted and it'll be really kind of controlled more by a smaller, more capable group of companies, you know, instead of sort of, you know, a long rat race of folks, most of which didn't have, you know, the capability of really financially developing this resource. So that was kind of the key takeaway from that. I think probably the panel was a little bit more optimistic than we are. But you know, but generally realistic.
Well, thank you very much, Abby. And I think that kind of takes us now to the end of our time tonight. So I'd like to thank you all for joining me to share your views tonight. I'd like to thank all of our viewers as well for tuning in. We hope you enjoyed our daily roundups and indeed the entirety of the Energy Intelligence Forum. But don't forget that all of the discussions over the 3 days of the forum are available here on our website for you to watch on demand. So just finally, thank you very much, all of you. And next year, hopefully we can meet again in person.